Exchanging can be characterized as the action of trading monetary instruments like stocks, bonds, prospects, items, and monetary forms, i.e., Forex. Both the little free financial backer and the enormous monetary administrators might act in world business sectors. These days, on account of the internet and the mechanical changes of late many years, the exchanging of monetary instruments has never been so natural. As a matter of fact, it is continually developing the peculiarity of the web-based exchanging that permits to screen continuously the advancement of stock exchanges and to immediately do the exchange. As per the Federal Reserve Board Survey of Consumer Finances, in 2013, around one U.S. group of two, 48.8%, hold stock in public corporations, either straightforwardly or by implication, contrasted with 40.0% in 1995. Also, the mean worth of stock property expanded from $228,300 in 2010 to $269,900 in 2013, surpassing the mean worth of $254,000 in 2071, earlier of the financial exchange crash of 2008. Regardless of the premium in the monetary business sectors is consistently expanding around the world, and it is joined by a developing number of suicides among traders too, experts or not. The emotional wellness local area appears to have trifled with the peculiarity of exchanging compulsion. Up until this point, exchanging has not yet been formally acknowledged as a movement conceivable prompting dependence, and the logical writing about this is as a rule missing. As a matter of fact, not very many examinations have explored the presence of a habit-forming-like way of behaving among financial backers, and when that was done were utilized models of obsessive betting or other vague compulsion measures because of the absence of explicit evaluation tools. 3,4 Collectively, these information persuade us to think that the presence of neurotic exchanging among financial backers is a genuine peculiarity, and that additionally addresses a significant general medical condition that merits the consideration of established researchers. In this article, we depict the image of an obsessive broker in view of our involvement in comparable patients and attempt to frame the conceivable examination models to invigorate the exploration about this. The proposed research models for neurotic exchanging are displayed in Table 1. Exchanging includes putting away cash to get more. Albeit most merchants retail, free, and proficient doesn't have issues, a few people foster a significant hindrance connected with their exchanging ways of behaving. The fundamental element of obsessive exchanging is a maladaptive conduct connected with exchanging, diligent or repetitive, that upsets the family, individual or potentially proficient exercises. Obsessive exchanging prompts an ever-evolving loss of command over exchanging, resistance and withdrawal side effects like the side effects present in substance use problems. In accordance with a past case report, a typical finding in our patients is that they report various little early wins followed by bigger and more or less secure ventures. The enthusiastic exchanging action carries the subject to steadily widen the time spent on the stock exchange, remaining on track for a large part of the day on the monetary business sectors, for example, ceaselessly take a look at his positions. Exchanging turns into the primary movement of day-to-day existence, and the financial backer who uses exchanging habitually doesn't have an objective dominance of the way of behaving taking on, yet feels wildly headed to contribute and keep on doing so, and all the more particularly, on account of monetary misfortunes, in the deception of having the option to re-establish control and recuperate misfortunes, pursuing one's misfortunes. Especially during high market unpredictability, a run-of-the-mill way for pursuing misfortunes is descending averaging or purchasing a title that has fallen in cost, and furthermore putting resources into new and more dangerous monetary instruments with expanding measures of cash. We are in concurrence with the Turner's viewing 5 that dissimilar to pursuing in neurotic betting, the methodology of significant worth money management isn't really unreasonable. However, attempt to habitually recuperate misfortunes through less secure monetary instruments, for example, influence items, warrants, subordinates, and exchange with expanding measures of cash are an indication of sensation chasing, risk-taking and resilience. This can prompt a feeling of power that fortifies a sensation of energy which the dependent dealer can't longer manage without, and suggests a deliberate error of the misfortunes and dangers. Specifically, a few merchants begin to fantasize about being an extraordinary financial backer and make statements like, "I have fostered an arrangement of stocks examination better than Warren Buffett or even Soros was only fortunate, while I'm predominant, yet these days the market is more controlled," and so forth. Obviously, these contemplations address a legitimization for loss of benefits and financial misfortunes that, along with the particular memory for benefits and the amplification of being an incredible financial backer, address a center component of neurotic exchanging. Besides, the self-centeredness and the feeling of dependability of neurotic merchants are additionally upgraded by the ceaseless perusing of monetary writing and online discussions for brokers, in constant quest for conceivable data to plan the following venture. Albeit this is a training more normal among non-proficient dealers, it could be a decent sign of impulse behind this jumble even among proficient merchants, particularly whenever done beyond working hours. Ordinarily, every broker beginnings purchasing explicit books on the subject, consistently peruses monetary writing and furthermore rides the various internet-based discussions.